Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for coming by today. Got a lot to talk about here. A lot of news inputs, volatility, news risk, fundamental inputs because of the ongoing conflict and some kind of and there's a lot of discussion that negotiations are going on and the market has been responding to the news. However, I think we have to be very vigilant since this thing can change very quickly. And of course, that's not specifically a trade recommendation. It is all plan based and risk management based. The other thing I want to just mention to you guys is that the Trader Lab, so you understand, is a group of like-minded traders who've come together to leverage their collective experience. It's really about the community, and different traders trade different time frames, if you will, and have different plans. So we have traders in Trader Lab who will be going long, and then we have other traders who go short, and it's not about right, wrong. Most of us think of this as a right, wrong business. It's really a statistically based business, and the only thing that's right or wrong is if you follow the plan and you only take trades that have statistical probabilities that favor you, even though the outcome's random. So we should be starting from that place. Now, there's a lot of excess risk in the market because of the geopolitical situation, so you guys should be aware of that. So you do need to know what you're going to do before it happens, not predict. So let's go from there and let's get started. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, today for me is challenging, and it's always challenging when you suspect that you're trading a squeeze. And when you trade a squeeze, the idea is we are trying to take out what might be the weak side. Now, who's the weak side? The sellers at the moment, because they're being squeezed. And that was yesterday's plan. Now, I'm going to go into that, but before I do, I want to remind everybody, if you haven't taken advantage of this, if you're visiting in YouTube, there's a link down there. You can visit Trader Lab. There's 60 PDFs of some of the structured trades I reference here in the stream, and of course there's a lot more. A library of webinars, these 60 PDFs, a document section, trade plans, all kinds of stuff. And of course, like everything, you have to determine what's appropriate for you and vet it. So there is no plug and play, so we all have to get over that. I know I'm just as disappointed as you. Except when I started out, there was nothing. So I'm in a little different situation. When I started, there was no information. I think you guys have it tougher because all the influencers, all the posts, all the whatever, all these things that work randomly, you latch on to them because you're looking, of course, for success and certainty. But if you don't do the work and actually prove it to yourself that it actually has a positive expectancy, even though you'll have random winning trades, you're still going to lose. So you might want to give it some thought. If you're working hard and waking up in the same place, why is that happening? Gee, I have winning trades, I just have to make it better. Suppose that's not the issue. Suppose it's not about the random winners, which we all have. It's about the statistical probabilities. And many developing retail traders don't have those statistics. They just have randomness. And that, in my opinion, is not a way to create sustainability. Now, those of you who already are taking advantage of having a high-end order flow tool like Bookmap, guess what? You can win $1,000 and 1 year subscription to Global Plus with data and have somebody come to your house and take a photo of you sitting at your desk. Now, how do you get this? Well, you have to be a subscriber. That's one thing. The other part is submit a current photo of your trading desk featuring Bookmap and just post it up on X, LinkedIn, or Instagram and use hashtag BookmapDesk. And this is for the month of April through May 3rd. Also, there's a runner-up prize, $500 and 1 year of Global Plus. Don't miss out. Send them in. I actually posted a photo of my trade desk and me from late 1990s or 2000. That's in the Trader Lab if you want to get a bit of a chuckle. I had CRT monitors at that point, and in Chicago, when it gets below zero, I never had to put the heat on in my trading office because of the heat thrown off from these things. It was very, very warm. So you might want to check that out. Now let's get into the higher time frame. Remember, if you have questions, please post them. I'll do my best. If I can't get back to them, come to Trader Lab. Use the link in the bottom, YouTube. There's a great community. By the way, Trader Lab's a professional community. It's about the business of trading. It's not romper room. It's about building sustainability and helping traders understand what this business actually is. And it's probably different than what you imagine it to be. So let's go talk about day before yesterday. Now, if you remember, and you should look at these streams, when the market mechanics, you have to understand market mechanics. If the market gets short, it's going down, it needs to relieve the stress, if you will, or the imbalance. There's going to be buy stops above this high. Now, we went down here on this day, and then we squeezed. So when we come up over the stops here, and we don't know how far, right? And there. Then I find my sellers again, and we go down. What do we do here? We squeeze out the shorts in here and fail to get there. Okay, fine. Short, then gap, come back and fill the gap. And this was on news, pieces breaking out, and maybe not, but not so much. And then it was shorts again, you see. Then we gap, and this is a breakaway gap. This is a big deal. And then down we go. Now we have all these shorts in here. So on this day before yesterday, my plan, and you can review this if you have any interest in it, and because we opened right here, my plan was to come up, get long, take out this high, fill the gap, and go here. And then there's another target up at this high volume up here. It was around 80. So that's was day before yesterday. Didn't work. Now, here's the other part. So I got long, got scaled. I think it was I can't remember where I went. And got taken out. Scratched the trade, and then it ran away on this day, and then there's a high probability of taking out the previous day's high or low. Well, if you can't go north, maybe you go south and take advantage of the probability. So it was all shorts from then on, and that turned out to be a good day. It's just, plan. Now, but what about now? Let's go back to day before yesterday. Has anything changed? What do I have now? Is this thing just going to do the Acapulco cliff dive, which of course it can? Or what about the shorts in here, the shorts in here, the shorts in the gap, and the shorts up in here, right? All shorts. Who knows? So let's go take a look. And what's our target up here? And this was a target, by the way, when we were starting this whole thing out, was to try to get 36 is an outside edge, just so you know. So 36 is a target. And again, for me yesterday, this was where I went. And then other trades after the stream, but not important, right? So this is the higher time frame, looking for the squeezeteria. Now let's look at yesterday, and you'll see where this went. So this is yesterday. So we got our squeeze. 72 is a high volume area target, and then we had 80 also, which I think where's the high of the day? Let me look. Brain is gone. 83. So we had 80 as this high volume area up here actually. So then once we have the shorts on the ropes, now this is something conceptually that may twist your brain a little bit, so please be patient. Remember market mechanics. How does the market work? Are we in a bull market, guys, or are we in a bear market? So there's a question. Ponder that thought. If we're in a bear market, the market needs to rebalance and take out the weak side. Just like all of this, take out the weak side. So for me, and this is not a recommendation, my plan for today was get long, get the continuation buyers, and then look to sell it. So that's me. So longs early and then shorts. That's my plan. And I'm not saying it's a good one. It's just my plan. Now, I also know this is a main target for me right here. Now, there's no precision in this thing. And remember, if we push through, we got stops here, we got stops there. Nothing says it's not going to do that. This is trading. But what I do and what I've shared in Trader Lab is, how does the market work? Why does it do what it does? And how at times can we get in alignment with it? Okay, so let's take a look. So for me, I've been taking shorts, and you're going to go, really? Yeah. Why? Well, because, and what's hard for me, and I think for many traders, is I'm not a fan of trying to pick the high of anything. But what I know is that I'm in a bear market, and if I can get the short squeezed out, and let's remember the concept. If the market is short, we can squeeze. There you are. If I get continuation buyers in, right, then what can happen to them? They become sellers. So for me, my plan today is to anticipate, and the problem, of course, is not predict, anticipate continuation buyers, and then if I can find exhaustion somewhere, and I got the stops here, remember? So if this is too high and this is just an area, I can be looking to sell it, and then I'm looking to come back and take out the longs. Now the problem naturally is, will it? I'll let you know in hindsight. I certainly don't know before the fact, except I know how markets work, and I know that if I put risk on, I'll take stops just like you. So we all have to get over it, okay? So this is the plan. And now let's look at today, and then we'll go into the structure that helped today. This is our target. Now, again, what happens here? Clueless. If I push through here, and I can push a bit, and I can keep going, now this is the next area. So for me anyway, I'm looking at the shorts, but I know I have fundamental inputs that the geopolitical situation, and we have POTUS speaking this evening, and whatever that brings, and there's a lot of conflicting news, of course, flying around. I wouldn't be too surprised, and this is just a guess, that there is negotiations going on. But I also suspect, and this is not political, that really Iran holds the cards here because of the Strait of Hormuz. So, so that's really the sticking point. So however that gets resolved, it gets resolved, not my business, right? My business is alignment and not predicting anything. And when it comes to the news, I have to take that, as they say, with a large grain of salt. The reason is traders don't typically trade the news. We're trading the participant behavior in relation to the news. Anyway, I hope that makes sense. Let's go to Bookmap. Let's see how all this comes together. So let's look. This is the 36. Okay, major target. ETH high is here. For me, my objective for today was to fill the gap and come down here. Let me tell you what the statistics are. So I start out with statistics. And if we're opening higher inside, let me make sure I got everything screwed on right here. This is yesterday's high, isn't it? No, hold on a second. Here, sorry. So we're gapping, so we're opening higher outside of range, outside of value. So what that tells me is the possibility, and that's all you got, the possibility exists to come fill the gap, and if we're opening higher outside of range, the potential of getting to yesterday's high or low, which would mean filling the gap, is about a 67% probability. So I am working initially looking to get the squeeze, continuation buyers, and then get profit taking and come back down into this area. So this was where I was looking for. But initially, long. So the concept would be the market is long. Those who think peace is breaking out, and of course maybe it is, that's not my business, we're gonna get continuation buyers. So that sets up my first trades, which are longs. All this is posted in Trader Lab. Then since I know I'm in a short squeeze, not a bull market, I'm gonna look to use the short squeeze, in my time frame, not yours, remember, different rotations, different time frames, to use the squeeze to reestablish short positions for continuation. Now the probability naturally is where. So that's where it is. Okay, so that's my plan for today. Now the thing is, if I start getting squeezed out, at some point I'm going to go, maybe not so much. Let's wait. And there's an important thing that happens here that then puts me off the shorts and just says wait. And I'm still going to be looking at shorts. So that's not a recommendation. It's just going to be from a different location. And if I don't get one, again, then, then that's that. I don't have to really think much about it. So let me show you the trade. Now, by the way, guys, yesterday, you guys should look at the first trade from yesterday. It is a duplicate of the first long trade today. Exact same behavior. And this is what process-oriented or structured trading is about. Understanding market mechanics, what might happen, where it might happen, and knowing in advance what you will do if it shows up. But part of this is knowing ahead of time where it might show up, not what it'll do. And that part, we don't have that, do we? So here's what I know. Overnight volume point of control is the, one more thing. Hold on. I call this kind of an anchoring thing, and I talked about it yesterday. If the ETH inventory is long, so look, what did we do? This is the high volume price from yesterday. Think of it a retail price, and it's just inside of yesterday's range. The ETH low, check this, which suggests this might be too low. Now, I have a 67% probability of filling the gap and getting to the, let me find it, point of control is about 38%. So I'm leaning to the upside. So that sets up for me initially long trades. And then I have a target, and my concern was we hit this in the ETH, and I'm thinking, well, did we already get there, So this was really important for me, the 36. So the question for me was, did we already do this? And then are we going to come down and fill the gap and, maybe get to ETH low? So again, that was my consideration for shorts. So I'm just telling you. Now the other side of that is 36. So I've got 36 on the outside to look for fades, and then I have this. So I'll explain these to you. So for me, I didn't get, shall we say, as much love as I like to get. But I'm also, and I post this on TradeLab, when I'm taking a position like this, where I'm fading the developing daily time frame to attempt to realign with a higher time frame, you see. So I'm in a different plan than you guys are. Other traders in TradeLab are long today, and they're having a wonderful time, which they should, So let's take a look at the So RTH open. We have 68% probability to fill the gap. So I'm looking for the gap, the continuation buyers, and then counter rotations and come back here. That's my thing. And then I have to try to align. And then that's the joy. So let's talk about overnight volume point of control. 81% probability, and taking out the ETH higher low, 97% probability. Taking out the first hour's higher low, 98% probability. I also mentioned in TradeLab, and I'm just telling you my plan. I'm not saying it's just the plan. There's no monopoly on, what happens. It's just plan and statistics. It doesn't matter anything else. So I don't sweat it. I just do my thing, and whatever it does, it does. So what I know is this is the last auction is the ETH. You need to screenshot this, and you need to compare it to yesterday. Okay. So this is the retail price. Now let's put a little line here so we don't forget where it is. So when I'm setting up for the day, I already know my levels. I know what I'm going to do. I know where I'm going to look for a trigger. And I also have this thing down here. I don't want to forget about this. So we're going to put a little line over here. So in case somebody falls asleep, it's not a problem. Okay. So this is support. This is the gap. 36. Did I put a, let me just get this straightened out. 36 is a target up here, right there. Let's see. And there's stops up here. So at the moment, this is not high on the hit parade. And we got resting liquidity here at a strike. So that's how it starts out. Okay, so let's go take a look. I'm going to discuss structured trades with you. And I don't take some of these trades because I tend, in other words, the trades are structured. But what I'm doing is I'm trading a plan, and so in my plan, trades may not qualify, whereas for other trades in Trader Lab, they do qualify because they're in a different time frame. Just want to make that clear. So I'm going to talk about structured trades. I've already explained my plan for today, and my plan is not at the moment producing for me. So let's look at the first trade, which is long. And by the way, I want to tell you that my plan doesn't produce for me on days. There's no holy grail, and you're always going to get the straight oil from the can. So today is not a good performance day for me, but it isn't over, as they say. It just means what's hard for me, and I think anybody, is when you're in a squeeze, is to try to pick an outside edge. My skill, and I don't think anybody really has a great skill of picking the high of anything. So this really creates a very difficult situation to try to trade. I know the condition I'm in. I know I'm fading a squeeze. And I also know the higher time frame is down. So it's just a matter of when do we run out of buy stops and continuation buyers, and then the sellers can come back in. So anyway, I'm giving you a scenario. Okay. Yeah. Hi, Danish popcorn. Yeah, I'm not so sure I'm conscious today. I hope you guys are doing okay. So let's go take a look. So this is called developing volume point of control, and what it is. And the way I use this on the open. Now, trading the open is about as aggressive as it gets because of speed, and you really have to have developed unconscious competence. And sometimes I feel when I'm trading, I'm just unconscious, That's a joke. I'm trying to throw some humor into this because we all get stressed out about this. What you're going to find if you've been doing this for a while, that doesn't do anything for you, getting stressed out, getting emotional. It actually is very disruptive. Here's what I know. This is the retail price. I get my buyers here. Now, part of the plan today was if we open higher, remember to fill the gap and get profit taking from those who are long from yesterday, which is where the gap fill comes in. Okay. And then I also know this is the fair price. So I cannot do anything with this because I want to get long, right? So I want to use the sellers if they show up to get long. So let's go see. Remember what's in here. Longs from yesterday. And what's the retail price here? So the first trade for me is a long. I'll show it to you. And I think the beauty of this trade is that, let me just try to get back here with this. Multitasking is not my thing. Just doesn't work for me. It's like walking and chewing gum. Try that and trade. So let's line this up for you. So what we were looking at here is this yellow line's the high volume. And when I'm below it, it acts as resistance. Okay? So, and this is, so resistance, if I break above it, it acts as support, resistance, and I can't do anything here. I'm sitting here and, FOMO, right away. Oh, it's going to go up. 36 is a potential target. Maybe I can't buy it here. And here's the other thing I know. Right here, I've got buyers, so there's going to be sell stops. So this now becomes opening swing low. Let's just follow and see what happens, okay? Who knows? I always go, I keep myself in this mental state of clueless. I use the term because what I'm doing is I'm not allowing myself to have an opinion. I'm attempting to align. So I kind of come up with this stuff for my own brain, So yeah, I don't know. It's like this. I don't know. And it's almost flippant, but it's really the truth. I don't know. So what I know is what might happen. I know where it might happen. And I also know I don't know. So right here, I see my buyers. It's my opening swing low. This is my opening swing high. And I'm looking for a long, and I don't know. Watch. Break low. Now, this is my location. You see? So right here, this is a long. Watch. Now, remember, trading in many ways is like real estate. Location, location, location. You see? So this is my long. So this is the long. This is my first long. No shorts at this point. Looking for the continuation buyers to trap them so they can become sellers. That's the plan for today. Watch. So right here I'm going, oh, you got it now. So let's watch. So coming across here is called mean reversion. You hear me talk about it all the time. I came down. I took out the opening swing low. Sell stops are here. Thanks for playing. They get a coupon to the buffet. And now I test the last auction. And this is, if it's too low, I'm going to bounce from it and come back to the current retail price. This is mean reversion. I always talk about it. It's the primary trade that developing traders need to understand. If this is too low, because this is the mean from the ETH, and now this is the developing mean in the RTH, developing. So if too low, back to retail. If this now becomes too low, and I hold it, I can now go up to try to find what is too high. And again, where is that? And I'm going to say, let me know when you know, because when it's doing its thing, who knows? Now, what else do I know? This 22 is, I'm sorry, let me get 22 sorted out. Yeah, has stops right there. That's a previous high. And I have this. Now I have sweeps. I have liquidity. I have this. And 36. So right here, I see my seller. I see absorption. I have the liquidity and the sweeps. This is a big deal. I get a sell. So I have buy sweep, say counter rotation. Sell sweep says going higher. Which one, Tom? I don't know. Break low. This is a problem right here because the sellers took control. So what happened up here was absorption, absorption. Break, break. This now is resistance. I'm going to show you this. Now, the thing with this is you have to have a trade management plan, okay? Now, here's what I know. At this point, this is the fair price. My VWAP and mid are moving away. Everything is suggesting to me that I just want to be long still, okay? So I'm trailing, and I'm trailing under this. Not saying it's a good idea. It's just what I was doing. Right here, almost lost my breakfast because I don't trade. I'm not there. I'm a little under it, and I'm just saying is now I'm going to use the word expect very carefully. I'm going to say I suspect I will get taken out. I'm always anticipating the thing that is not in my favor versus the thing I quote hope for in a random environment. Same thing. So mentally, I put a trade on. I already have taken the stop in my head. So I already have made the investment, and I look at it as an investment to see if this random location is going to, if my edge will come out, or if not on that random sample. That's kind of the way I look at it. So anyway, so got away with it here. I think that's a good way to look at it. And then just hanging in here. So once I come up above this resistance, I have support now in here. Now don't forget, there's a lot of news flying around, and anything can do. So again, come back up here. Now this is where my stop is now. Once I break above here, let me show it to you. It's the same as this, by the way. So resistance, 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 break high. This becomes support, and it's here. Okay. Now, again, what I do is not what anybody else should do. I don't put my stop here. I look at where the buyers took control. I had sellers here. You can kind of see, let me just extend this thing for you. Whoa. Let me do it this way. So this right here becomes support. And I go under these consolidations where the other side took over. So what I know is I have sellers, sweep. This says counter rotation, just so you know. If I break above here, this becomes support. If I test it, I know my buyers are here. I run my stops away from the noise. Other traders are more risk adverse than me. What I found over the years, without having any empirical information, I automatically ran a tight stop. And that decision was made psychologically, not based on anything material, So I don't. I move away because I found that if I put my stops with everybody else, I have a pretty good chance of getting taken out on something like this, you see? Because where's the stops? Well, so I know this is where the buyers absorbed. You see it? So my stop will go where the buyers were. What was here? The sellers. And the buyers are here. Well, if the sellers are here, why wouldn't I come down and check? You see? So it's just something I do. I'm not saying it's good. You have to vet it. So anyway, just doing the thing, Now, and we had reports this morning, I'll tell you, and news. I mean, it's just really, I'm going to use the term, kind of a environment that's kind of difficult. At least it was for me. Now, other traders in Trader Lab had great mornings. What does that tell you? It tells you everything is planned and time frame specific. I trade large rotations. So I'm pretty much I don't want to call it a swing trader, but I trade intraday swings. Now, this is called VPOC migration. So and right here, I'm still working shorts. So I should say I get taken out, and now this remember where my support is, right? So when I break under here, and now I get VPOC migration. So there's two possibilities, up or break. I sold this, I scaled here, and now I am thinking, there's the right word for it, I have my opening swing low, and I can get below overnight volume point of control. Now I'm looking for my gap. So this is, so longs early and then short. And then I was sticking on these shorts. And it was like, I'm telling you, it was like kind of, and this, you see this is resistance right here. See the test. So everything right here is saying, you got him now, Tom. VPOC migration. Let me label this. Everything at this moment, stressing the word moment, is saying down. So I'm all right. I'm sitting on my shorts and I'm going, okay, this is good. I'm risk neutral. I've got some dollars now for the pizza, and I'm looking for the gap fill because that's the plan. Remember what the plan is. There is a 67% probability to fill the gap today. And doesn't have to. Remember, it's just probability, not predictability. So anyway, still going down. And I'm under here. So if I'm under, I test this again. Remember, this was, and there's stops here. So when we come under these stops, right here, there's a little bit of teeth chattering. And the reason is that if it's only a stop pick, and if you look at yesterday's early trades, this was the same exact trade. Long, come down, pick the longs out. Remember how the market works. It goes up and there's sell stops in here. It goes down, there's going to be buy stops in here. That we know. What we don't know is, do we only grab the paper under here or the stops and then we come back? That's what we did yesterday. Now, I sit here just like you and I go, you know. So anyway, I know this is important. So for me, the shorts are scaling, risk neutral. This is the next area for the stops and then down. Okay, so that was my short and sticking with it, and that's the way it is. So watch. So here, right here, so I'm still looking for the shorts. Okay, so here I get, and this is where I was thinking, this is where the trouble is. When I come up here and this shifts down and I hold here, I put, I added, I'm just telling you, I'm not saying it's a good idea, it's just what I did. And then I'm coming back to scale in front of here, because that's where the buyers were, and then break low and fill the gap. All right, so I'm just going to say I was okay with all this. This is all wonderful. This add, and then boom. All right, get down here, really starting to get the champagne on ice and the ribeyes ordered, and then I get this. I come back here. This is my resistance. So I'm now sitting here, and I have what I do is I build up something called theoretical average, and all that is I move. What's happening is if I add and get scaled and build a position, I'm moving my stop further away so I don't get taken out in the noise. 68% probability, to come out here. So where's my next resistance? It's here, you see? So I get a sweep here. So I get taken out, grumbling, and I sell it again here. I mean, I just got picked right off, and I just follow my plan. So I have to stabilize myself mentally, FOMO, anger, revenge trading, all that, right? So I'm trading something here called mean reversion. I'm in the short mode at this time, and I'm going outside in trading. It's reversion. So all I'm doing here is I'm trading outside in, here, outside. So outside in, outside in, outside in, outside in. See, so these are my trades. So I took this one, got scaled. I was pretty happy about it. Got stopped out, I should say. Took it again, got scaled, got taken out. Put it on again, got scaled. So this is what I was doing. So I was getting risk neutral. So I was all right with this. But what was starting to happen here was the longs are holding on here. Now, at this point, I don't know. I'm sitting here going, well, I'm following my plan and I'm getting my scales, but I do notice a bit of a problem. But it hasn't changed yet for me. Let me show you. Now, remember, short to there, short to there. And I was posting this in TraderLab that I was trading mean reversion. And remember, other traders in TraderLab are taking longs. They turned out pretty good, I think, didn't they? Right? So let's watch. The volatility was really high. So I get taken out again. Now, I come outside. I have this right up here where my sellers and absorption was. So I look over here, I come outside, I'm getting squeezed, and I'm getting, getting a bit, I can use the word frustrated. But I'm just following. In other words, I feel the emotions, and I really want to stress this. What you guys feel, I feel. But I don't necessarily, the best I can, respond to my emotions. What I've found over, unfortunately, making the errors and responding to my fear and all the stuff we all do, okay, is that doesn't work. I don't have an edge doing that. That actually creates errors, and that creates losses that are unnecessary. I'm going to take stops anyway. So I prefer to take my stops following my plan versus gambling or being emotionally triggered. So over years of practice and trade plan, I anticipate these things. So instead of being surprised and responding, I have like a circuit breaker built in that when I feel it, I recognize it. And that recognition makes me stop. In other words, no, don't, because the impulse is to push the button, bail out, and avoid risk. Well, I can't tell you how many times if I sold this and it comes, and it breaks down and it comes here, I would bail out back in the old days, as I like to think of it. Or come up here and then say, oh, it's going up, and then I get another short here. What do I do with this? I come back here. I'm still trading the same plan. I come out here. I'm getting bumped out, and I'm making higher lows and higher highs. You might say there's a bit of a problem, but I'm just following a plan. I want to stress that. So but I'm also having emotional responses to it. I'm getting annoyed. So, and I'm, until it breaks, it ain't broke, as they say. So I'm getting my sweeps. But I'm getting picked off, like here. I'm getting my, it's all right. And now back, and I'm trying to come back here. I'm still trading the reversion trade. So that's my plan. Get my scale again, you see? So now, and look what happens. The buyers, and I'm looking at these rotations, and up in here, it was pretty much okay for me on the shorts when this happened here. And I get this. And I don't know if that was news-based or whatever it was. Now, I have to mention something else. At the first hour's high or low, there is in this configuration about a 98% probability to take out the first hour's high or low. Now, I was already looking at this thinking, well, this is a bit of a problem, but my next trade, if I want to try to fade this thing, is going to be selling the IB. So in other words, let it take it out. I have 36 as a target, and depending on the behavior here, so I have this as a target, depending on the behavior right in here, I can sell this, and I'm looking to come back to here. That's the trade. It's called the IB failure, and but I also know that I'm trying to get a line for continuation shorts, and that might not happen, of course, and that's my plan. So I come up here, 36, I take out the IB, so now I have what's called range extension, and I know right here this is my primary target, and then we have this also, so I'm going, this is not so good for me, but I can trade the rotations. So right here, this is a short for me. Take the short here, trying to come under here. Okay, so the short was here, the stop is here, the scale is here, head of this, and then the idea again is to come here. All right, so what I'm trying, just so you understand, that's my plan, 36. And I'm also aware that I have a high probability of going there. So I know that if I don't get back under here, and this is called a low volume node, so it's an outside edge. Think of it this way: too high, too low, and this is called the high volume node. This is like your volume point of control, and it's in alignment with this. So if this becomes too high, I can come under here. If I come under there and I can stay below here, then I got this, which is fine. Look at the range. If it doesn't work, I'm risk neutral. All right. So, that's it. That's my last one. So it was a lot of work today. I got to say, I don't have anything to show for it, really. I mean, some, but not much. So now I've got this. Now I'm going to come back to the higher time frame. Let's see if we got anything sitting up here. So this was the primary target, okay, 36. So now what I know is I have stops here and I have stops here. This is really important. So for me, I have nothing to do at the moment. I am going to be watching very carefully for potential exhaustion. Now, the other thing is we have a gap. What happens with gaps? So when we had these gaps, this gap, breakaway gap, squeeze it. What about this? It's going on the hip parade. In my opinion, at some point, just like this one, this is going to get filled. I already know I want to be short. I don't know now. I don't have a location. I'm going to be potentially looking at shorts still today, and I have to stress, I am trading a higher time frame. In other words, I will trade potentially to fill this gap today. And maybe not, and maybe come down here today from up here. So you could see that's a rather large range. Most of you guys, I would suspect, don't trade that. I do, and the reason I do is when I get that on that kind of range, it pays for these stops I take, which I do take, so I look at it, I've changed my experience. And what changed it for me, and again, this is all individual, I got, over the years, when you start out in this business, you think about winning trades being profitable, percentage of winning trades. Because you think if we have more winners, obviously, right? But it isn't percentage of winners, it's actually percent R. So it's, in other words, if you're getting stopped out and you're looking for 20, 30, 40 point rotations and you're risking 3, 4 points, whatever per contract, or 5 depending on volatility, it pays, you see, because of probabilities and expectancy. Percentage of winners doesn't need to be high. So you have to configure your plan to accommodate your style and what gives you a positive expectancy. And again, not recommendations. I am still, in my time frame, looking to be a seller. And it doesn't mean that this thing will do anything. Whatever it does, right? I hope that makes some sense. Now, here's our real time. Let's go look at this. And I don't call trades, I'm not saying this is a good idea. I'm just saying this is what I do. Let's look now, and let's get into this. So what do I know? I have resting liquidity here, and one of our traders in Trader Lab pointed this out early. He says, look, we got a boatload of sellers in a limit order book, and we have this here. So this is meaningful. One moment. Hold on, I got to move something around here. One moment, guys. Sorry about this. There's some pretty good selling up on the high over here, but that creates rotations. The fact you have good selling at any location does not mean anything other than maybe a rotation. The high of the day starts out like any other counter rotation. So right now the trend is up. The squeeze is continuing. We're over 36 key level. We got the ETH high. Whether or not we're going to come back later in the day. POTUS is speaking this evening, 9 p. Eastern Standard Time. He's going to be talking about NATO. He's going to be talking about the situation in Iran and making a deal and the rest of that, of course. So that, I think, what you got going on here is anticipation. It's kind of like the Heinz ketchup commercial, anticipation, and you're waiting for it to come out of the bottle. So this is the short squeeze. Remember, the higher time frame trend is down. So but we can get, if they actually do cease hostilities, which may or may not be on the hit parade, we can see a substantial short squeeze. And then the economic elements, the result of these items and these events, and the cost of the spending and the rest of it is not gone. The inflation that's coming is in the pipe. It just hasn't shown up yet. But we have to trade what's in front of us right now. So for me, what I'm doing is I'm just looking for the continuation. And I don't know where or if. And of course, if all of a sudden happy days are here again and the trend changes, then, that's it. So my job in my time frame, and again, it's time frame specific. My job is to look for continuation shorts in alignment with the higher time frame, because that's where the opportunity is for me. Squeezes are opportunities to get back in alignment with the higher time frame. This trade, that really the long trade, started up over in here, and then it continued. In other words, it was here or here. For me, is just the squeeze. So I don't treat it the same way. I do trade the squeeze, but I also don't get carried away. What I do is I have to always keep in mind, why is the market going up? And you're going to say, buyers, here's something for you to think about. Think about this. If the market gets short, who are the buyers? Now, there's two buyers in the market. There's the shorts who become buyers in the squeeze, and then there's new longs that come in thinking happy days are here. And it's not a right or wrong. The longs really may be in the driver's seat here. But in a downtrend, we need the longs to come in to become the sellers. This is market mechanics, and it's probably one of the most overlooked concepts. We're all looking for mechanical, and I understand, me too. But I found that doesn't, for me, is not necessarily the way to operate. I operate because I cannot be doing what most other traders do. I found that by thinking like a retail trader, I'm going to probably get the same results. So what I had to do over the years is develop an understanding of why retail traders fail in this business. And a lot of that has to do with certainty in an environment that's completely uncertain. So over the years, as I saw repetitive processes and behaviors of other traders, I determined that they don't have an edge because most of them fail. Yet they all have random winners. So I looked at it differently. I said, well, you know what? I got to learn from the tuition I have paid. And that is, think like a retail trader, but don't act like one. And yeah, I'm going to take my stops. I don't know. Everybody has winning trades. It's random. I have an edge, but I can certainly have losing trades. What does that have to do? You see, the thing is, over time, not today, not tomorrow, but over a random distribution of rotations and outcomes, does my plan deliver me a positive expectancy? And there's some days, if you take 3-4 losses in a row, and it happens to me, that's when your brain goes off and say, hey, this plan stinks. Well, no, it doesn't. What it is if I'm not in alignment, I'm going to take stops. And I'm not fast to change. I'm slow. I think of it like turning a barge around, or an oil tanker, since we're talking about Straits of Hormuz. What does it take to turn an oil tanker, right? Or to stop them, 10 miles or something, right? So right here, I'm still, and I can tell you, and it's not a recommendation, if I come back under here, it's a short. It's called the IB failure, and it's a reversion trade. And we have a 29% probability of taking out this low and a 68% probability of filling the gap. Now, that may not happen today, and we may continue getting more long stuffed in here, which will become potentially the sellers either today or tomorrow. That's my plan, and I have to really stress, it's not a recommendation, right? So, but it's important to do always, is think from both sides. Now, if you get off sides, like me, I've been selling this thing. So most of the trades have gotten risk neutral. But as it pushes outside of locations, and this right here is important, and now this out here is important. This is an auction, so too high, too low, high volume is right here. If I fall under here, then I can come there. It's sequential. Now, if I wasn't streaming, and you probably think I'm nuts, and I wouldn't disagree with you, this is a short for me. I'm not saying it's anything. It's Countertrend. So Countertrend is not the same for me as trading in alignment. So I'm in alignment with the higher time frame, but I'm not in alignment with the developing time frame. It was kind of like yesterday. It was the same kind of thing. The higher time frame was down, but the long yesterday was Countertrend. Well, now the longs in here are still Countertrend, but I'm now trying to get aligned with the trend, which is down. The problem is the developing time frame, the trend is up. So higher time frame down, developing time frame up. So what it does then, it says this is Countertrend, and trying to find the outside edge is really difficult. It's very hard trade for me, but because of some developed skills, most of the time, if I'm patient and indisciplined, I can get risk neutral. I know when I trade this reversion, I have my plan is a bit different. It's very much, it's when you're trying to fade, I'm trading reversion. Now, reversion is rotational trading. The thing to think about, and we'll just see how it plays out. It's always very interesting to me because I have no idea. Remember, clueless. That's my line. Someone says, well, what do you think? I'll say, I'm clueless. And I can prove it. Why? Because it's random. These are shorts for me. Now, everybody in Trader Lab is going to put their jaw on the floor and just shake their head, going, okay. But they're not trading my plan. And this is the thing I always try to talk about in Trader Lab. I am trading a different plan. Other traders in Trader Lab got long today. They are clinking the champagne glasses. They're ordering ribeyes. Me, I'm on a different plan, and I have not had that success today. So that's okay. It's just one day, I don't get too carried away with it. I know my risk reward is exceptionally high, but I also know I'm fading. So that means I have to get risk neutral, very aggressive, okay? Because remember, just the fact that N50 is really, and sellers are here. Here's my icebergs, and I know the trend is up. So if I'm taking these trades, I must execute aggressively and scale aggressively. And where's my outside edge? Let's come back. It's right there. If I can't get under here and fall down, I'm going to do this. So what I'm trading is multiple time frame reversions. So if I sell this, this is where I have to be thinking. This is like a volume point of control. Multiple time frames. Remember what high volume is. It's the retail price. If I find I'm not paying that, then my support is this. If I can break, and you'll see the behavior right here. I'm going to put a little line on here so you can read this like I do. This is the retail price. If this is too low, I can bounce off it and keep going. If I break below it, it's now too high. And that brings me down to the outside edge, which is here. If this is too low, I can come back here. If this stays too high, then onward soldiers, you know what I mean? This is how I trade. I'm not saying it's any good. I'm just saying it's something interesting, isn't it? So other traders, here's the thing, and this is what will get you if you want to be a trader. What is your plan? Are you selling this? Or maybe you should be, and I'm going to say your plan might be buy it for new highs. See? Which one is right? You know what's right? Just trading your plan. The outcome, yeah, who knows, right? Can you detach yourself from the outcome and focus on a plan that you've done the work? You know, there's a lot of information in Trader Lab. If you haven't done this yet, if you don't know that you have an edge, then you have no trade. Matt's asking me if I, what do you mean, Matt? You're asking me, would I get long today or just stick to my plan? Well, hindsight, long would have been more productive, but I'm not going to get long. And it doesn't matter if it keeps going for me. You know, I'm just trading aside in alignment with the higher time frame. So I prioritize time frames because I know I have sellers built into this thing. You know, now they may be euphoric with the piece breaking out, and that's okay. Here's my outside edge. Remember, right here. So any shorts I take up here, I'm really in a very aggressive risk management posture, and they're not recommendations. All this might be is just a rotation to come out here, and this is my resistance. I want you to see how the market mechanics work, not predictive. It works like this. Oh, it's on sale. Retail. I'm not paying that, shopping. So this is the high volume. Hold on a second. One moment. And nobody knows where these highs and lows or anything is, you know. If you know, you let me know. Because I would prefer just to take the trades that, you know, perform. But I am trading a plan that, and I really want to stress this, I'm not going to tell you this is the best plan on the planet. It's just the plan, and it has an edge. And there are days, since I'm sampling the market, look where the location is. This is very important right here. So remember, if I'm selling this, what do I have to get under? I got to get below here. You see? This is high volume. You see where it is? So if we think of it how this might work. I'm not paying that outside edge right there. And then where's support? This thing. This was a target coming up. If I can't get below here, then I can bounce, and this is resistance. Now we know where resistance is. We have it there, of course, and now we have this thing. High volume. Let's watch structure together. This is the beauty of the auction. The auction doesn't tell you what it's going to do. Yeah, you know, what the auction tells us is where it might do it. Bull hugger. Wait, let me see. Matt, when would I turn the barge around? You mean to get long, Matt? I'm not sure what you're asking me. Bull hugger? What is your plan to get into a reversal? Well, I'm already trading the reversals. But it's a very hard trade because I'm trying to pick outside edges. It's really rough. And I don't suggest this kind of trading for anybody unless you're already profitable, you know, because I know I'm on the weak side here. What I'm trying to do is, and I already know where my obstacle is. It's right there. You see? So I already know this. I know to go lower, I got to get under here. There it is, low volume. If it's the outside edge, I can come here. I know that. If I wanted to get long, this is where I'd be looking for a long to come back there. You see? Anyway, I hope that answers the question on would I get long. So no, I'm not going to get long. And that doesn't mean that not getting long is the right thing to do because the trend's up, you see. So if I take this trade though, but this is, if I take a long, I got to get over this thing. So my range to get long is like from here to here. And I can't enter, you know, like on a, you know, let me show you. Now, I'm not taking the longs, okay? Doesn't matter. And you're going to go, why aren't you taking the longs? Well, market is long. Stops are below me. And while we might just keep making new highs and keep squeezing, which is completely possible, you see, you can be profitable taking the shorts. Look at the range. Nothing wrong with this. you know? And then if we come back above, and this is gone, see this? This is opening the hatch. So it might mean if we come back above here, we just keep going, right? So it's okay. You may find this very counterintuitive and very conflicting. I understand. So that's why it's not your plan. Other traders in Trader Lab might be using this for a long to go there and to stay with the longs because that's the dominant side right now. You see? Yeah. So let's see the behavior here. So what we're doing is, this is called rotational trading. So if you sell this, which may or may not be appropriate, you're going there and then you're coming out somewhere, you know. And this is the outside edge. So for me, if I come back up here, then, you know, if I was just taking the shorts, that's okay. You know, I could be done with it here. Or if I had a runner going for the what they call the Hail Mary pass, I get taken out of the runner and scratch it. That'd be okay. You know, so for me, and this isn't a recommendation, I run like a 3-lot on something like this. So it's not a big deal to me. Or if you're trading with the trend, you'd be taken along here, so go there. Both are okay, you see? Right, Furs. Yeah, this is either an add or a long here, or a short down to there. You see how this might work? You can trade from either side. Remember, the dominant side is the longs who are getting, I should say the shorts are getting squeezed. The dominant side are the longs, and the longs are, this is a squeeze. Trying to identify the outside edge is part of the thrill because it's random, so I don't know. First, did you take that long at the 36 on this counter rotation to that outside edge? How you guys doing? How you guys doing in YouTube? Don't hit your head on the desk. So we have trend up in the developing daily time frame. We are rotational, which opens up trading from either side. The dominant side is the long side currently, and you can trade it from either side. If you want to be in alignment, you'd be taking long continuation trades back here. If you are inclined to trade from either side, you can, you know, just be taking the rotational trades. It's time frame based, you see. I hope that makes some sense. So anyway, everything is still intact unless we come out under here. If we come under here, then it sets up a different element. It sets up coming back here because there's going to be stops under here. So, but that would mean that the longs are going to get thrown under the bus. And I don't see that at the moment. Okay, so what I find really hard for me, and I would suspect for most, is picking the high of anything is very, very difficult. In fact, it really, I don't try to pick the high. I just look at the behavior and locations, and based on my understanding of how the market works, I can sell this and I can buy this, or I can sell this and just be scaling and then be done with the trade. In other words, I can just trade a range like this. These are all specific trades. If I'm only taking longs, I'm not taking the short. The short becomes trade management. You see, it's all a matter of time frame, and then long continuation trades. If I'm trading just fading the rotations, I can sell this, and I already know I got that and that. See, so all this is structured trading. You can kind of put it together, you know. Well, what I've always said about, I'm getting the question about, I always say stay with the dominant side. And then the question is, why am I sticking with the shorts? Because that's my plan for today. I'm not, to me, the dominant side's a higher time frame. So I'm looking at this as just short squeeze, a counter rotation. So I'm really am with the dominant side in my time frame. In the intraday developing time frame, the longs are dominant. So I always say developing traders, and I'm not a developing trader. Developing traders should stay with the dominant side, which is the long side. So I'm okay trading from either side, doesn't matter. But since the market's extended already and I have longs in the market, which can continue higher, it's all fine, then I'm inclined to be a seller only because I have sell stops under me. But I know the trend is up. So that's why for me, I know in the intraday developing time frame, longs are in control. I know that we're still squeezing out the shorts, and I know that selling any shorts in here are counter trend in the developing daily time frame. Kind of sounds strange, doesn't it? So it's counter trend in the developing daily time frame, but in the higher time frame, which is short, this is longs are counter trend in here. So aligned with the daily developing time frame. See, I'm talking a vertical integration of time frames. This is of course confusing for everybody. So I have my plan laid out and then I just trade my plan. So I am not in a situation here where I'm going to be taking longs, though this is a legitimate trade. Okay, so from there to there. By the way, this trade from here to there is called mean reversion. You can trade it from either side, counter trend side, alignment side. Back to there. So outside in, and then you'd be looking to take out the high of the day, or outside in to come back outside. You see, so it's a rotational trading. So time frame wise, and I hope this isn't too confusing. You're saying, well, why are you taking shorts? You could be taking longs. Well, good question. But my plan for today was to try to test and see if we can get these longs trapped. Because for me, and maybe not today, maybe tomorrow, maybe never, for me, the real opportunity, and again, unless there's a primary change structurally, is to sell this thing because these longs are going to become sellers. That's all I'm saying, So that's what I'm okay. And is it due 8? I hope that answers your question. It is conflicted, isn't it? And it's probably confusing, and I apologize for that. I should probably stick to more basic dominant side trading for you guys because I'm probably showing you something here that's going to create conflict, which is not my intent. My intent is to show you alignment and structured trades. So I probably should just be sticking to this and showing you only this and not talking about why this works as a counter trend trade, you see. So I always say, and that was correct, trade with the dominant side. Don't be a fader. Darth Fader. This is a dominant aligned trade. This is a counter trend trade. Okay? Is this clear, by the way? Well, you know what, dude? I don't know. Why don't you spell out how you want me to say your username there? I want to pronounce it properly. I'm just trading. I'm looking for realignment, and we may just squeeze out for the rest of the day here because there's going to be this. POTUS is going to do his thing tonight, and it might be one of those buy the rumor, sell the fact, or it might just who knows, right? So, but what I kind of have noticed over many years is that those who know, and he's got a speech. Everybody knows what's going to be on that teleprompter. So that's in the market already. So so what does this mean? Shorts are covering because of the anticipation. But what happens if once that anticipation is out, then what happens to the longs? That becomes the question. So I've just been working on the short side to get realigned. Not saying, and obviously the dominant side is this side. But can you see the logic behind this thing? If you sell this, this is your fair price. And if this is fair, and notice here, it checked it. And then if I get outside and this is important, remember this was an important area, and it's too low, then I can come back the other way and squeeze and get these guys out. That's rotational trading. So anyway, just want to say with the trend, this is a long continuation trade. This is a short counter trend trade. Can you see them from both sides though, right? The long at 36, I'm getting a question, how would I enter it? Here's what, first of all, location, think real estate. Sweep, so sweep. This says potentially lower. Location, think real estate. Break high. Micro, high volume. I'm going to take you down into microstructure. I might as well do this, show you triggers. Now, you have to vet everything, guys. You know, the other part of this 36, is it's a location, but there's no precision. We could come under, you just don't know. Right here, I see the buyers and I see absorption right here, icebergs. All right, break high. Now let me show you the micro. As long as you ask me, I'm going to, why, we're going to get VPOC migration, still bullish. Hold on. Down here, we come to location. There's no idea. See the change in behavior right here? There's your buyers. So now, where were my sellers last? They were right there. I'm going to put a little line, right, where the sellers lost control. And in here is high volume. I'm going to put a little line there so you can kind of see this. So this is what happened here. This is like your volume point of control. This is the same as high volume up here. All right. So this is like the fair price. When I break under this, it is too high, going to zero. This was too high, coming up 36. If I get above it and come back and check from this side and it's too low, and now let's go back down in time frame as you think of it, and this is too high, so I have support, resistance, going to zero right here, break high, resistance is there, support is here. When I break high, this becomes support, and this is support, and this is support. So the way to get into the long would be to be buying in here, stop out here. If you run your stop tighter, that's your business. I tend to not. And then you're trying to scale here. You see what I'm saying? It's all structured trading. It's what I call it anyway. So let's watch the behavior. So with the condition of the market in alignment, it's a long from there to there. If you're trading the other side, it's a short from there to there. That's all I can tell you. And both of them are legitimate, subject to your trade plan and the rotations you trade. So, but the shorts are advanced. This is not really where developing traders ought to trade. That's why, to answer the question that was in Trader Lab, always align with the dominant side. So let's see what happens here. Let's come back to where the sellers were. Let's come back. $50. And there's still liquidity resting up there. So we have sellers at 50, and we can certainly still take them out. The trend is up, right? So let's just say no disagreement that the trend is up today and that we're continuing to squeeze. No disagreement there. And again, your plan, your time frame. So, and there's stops there. We have this outside edge around 94. And then we have stops up in here. And we can, come up, we could go anywhere, okay? So that's about it. So dominant side is the long side. And that sets up for me shorts. Maybe not today, but soon. Very soon. Not a recommendation. I want to be very specific with you guys. The dominant side intraday is long. So I'm doing what I guess we would agree is counter-trend trading today in the developing time frame. And the fact we're above 36 is material. Okay? So there's no reason for anybody, unless they have an edge trading counter trend, to be taking shorts at this point. So this is okay. This is, by the way, what is this called? So you know what I'm doing here. This is called mean reversion. Now counter trend reversion is to come here. If I get under here, it's to come out here. That's pretty much the extent of it, unless we can get under 36, right? When you review the stream, you'll hear that, because it's if this, then that. If not, then what? Then that. You see? So if this is too high, then reversion. Then what? Well, either bang up, too low, or break under it, now too low. Then reversion from the other side in alignment, long to there, and potentially back here, because that's aligned. These are trades you can vet, and you could trade either side. What I always suggest to developing traders is the way you learn this is you trade and align with the dominant side. And when you get this kind of thing, which might be a short for me, it's a trade management thing for you. It's an exit. So it's all up to you. This is okay for the long. This is the right trade for Trader Lab. This different. Counter trend. So when you look at statistics, you also have to look at the difference statistically between aligned trading, longs, and continuation trades versus counter trend. And you're going to see you have a different edge. How we doing in YouTube? Everybody conscious? You don't want to hit your head on the desk. Hope you're getting something from this. I do suggest you screenshot the first trades this morning, because the first trade this morning, the long, was exactly the same trade for the same reasons as yesterday. This is what structured trading is. It's not predictive in the sense of what it'll do, but what you're going to find is when you build out a trade plan, you're going to already anticipate the behavior. Certainly don't know what's going to happen. And then when it shows up, your job is to be ahead of it mentally. So mentally, you already know what you're going to do and what you need to see for a trigger, what your scaling is, why, where, and then trade management process that over time delivers an edge, not one trade. Very important. This is about the business of trading. The business of trading is really just extracting edge. And you need to know where your edge shows up. I have different edges. So I trade different time frames and do different things. And there's going to be days the traders in Trader Lab are doing what they should do because they're following their plan. And my plan does not give the yield that their plans gives them. And I'm perfectly okay with it. You see? Because I am working on trying to get in alignment for continuation shorts. So if this is not the right day for it, and apparently so far it's not, then I'll just bring it forward tomorrow. What I'm talking about, and remember, I always have to keep coming back to, well, hold on. The reason I was looking for a long here and the long this day is the same reason I'm looking for the short. Same exact reasoning. And why didn't it work today? That day, I mean, because I had the long first trade in the morning over this location, and then when we broke below it, it was just shorts. That's it. Today and then yesterday, we checked the overnight volume point of control, which was right there, which is the same first trade as this morning. You see? Same. Now with the gap, I have this 67% probability, but maybe not so much. Now this high volume was my target at 36. So the 36 is really important. Now I'm above it. So now what do you do, Tom? Right? Well, I don't have to do anything. I could take the long at 36 because what? This was too high. If I break above it and come back, maybe it is too low. If 36 is too low, then what? Up. When we came up here earlier, and I showed you this, it was a short. Too high. If I get above it, too low. Process, you see? You can learn this. Not saying it's, By the way, no holy grail. Doesn't exist. But 36. So we hold 36, then what's next? What's next is going to be 60 half and these stops here and here. And the further outside we come, in my opinion, unless things change, the better it is for short. So that's my challenge for today. And probably today it's not going to happen, but when I say probably, I'm going to say so far. So far what the market is saying is more squeeze. So that's okay. Any questions, guys? Post them. If you're in YouTube, please give a like. I hope you got something out of this. I probably should stick to just the dominant side. It'll be easier for you guys. But I just wanted to show you that if you have an edge, you can trade any time frame, any rotation. But I should probably just keep things a little more clear. So apologies if this is conflicting and confusing for you. If you're interested, by the way, Trader Lab's available to all of you. There's no cost for it. This is really about the business of trading, learning to understand market mechanics, how the market works, why it does what it does, how you get in alignment with it at times, and then you put your helmet on. Can you see the rationale of the 36? If it's too low, then back to here. And then if we get above here, back into the squeeze area. And I can't say it will, won't, or otherwise. It's not my job. See? Where's my stops up above? Here's the next layer of stops, and this is an outside area up here and resting liquidity, 800. Doesn't mean it'll be there when we get there, if we get there. But I know I can still come here and here. Doesn't matter. I'm not attached to the outcome. I am very attached to following my plan. It's the only way I can kind of determine, because the plan, if it has an edge, then my job is to show up and put the coin in the slot and see what the outcome is. Quick reminder, there's a contest going on. You can win $1,000 in a year of Global Plus in one exchange. All you got to do is submit a photograph of your trade setup with Bookmap, submit it, post it up there on X, LinkedIn, or Instagram with the hashtag BookmapDesk. This is open for the month of April, going through May 3rd. If you're, be sure to take advantage of this. Also, market will be closed Friday, so Thursday's the last day trading for the week. Are you going to want to go home long over the holiday weekend, a 4-day weekend? Just think about it. Thanks, guys. Please give a like. Don't forget to hit the thumb in the YouTube. Thanks for visiting. If you want to visit Trader Lab, there's no cost. It's open to everybody. Currently, you don't have to be a Bookmap subscriber. Use the link down there. All you got to do is verify your Discord username. You won't be abused, spam-related, or any of that solicited. All you need to do is be serious. Trader Lab's not romper room. It's about the business of trading, and it's open to all of you. Thanks, guys. Thanks again for visiting Trader Lab. Look forward to see you guys real soon. Mind your risk. We are in a very high risk environment, so act accordingly. Take care, guys. Have a super day. Look forward to seeing you soon.